we're live. Hey, everybody. Glad to see you. I was just chit-chatting here. We got about a minute to go to the top of the hour. And, yeah. So Frank says there's ice out in West Tennessee. It is still about 45 here in Knoxville. It is not sunny, though, even though the picture on the screen right here shows a nice, sunny, beautiful day down on UT campus. This is not the way it is right now, so... All right, good to see you, B-Ray. Good to see you, Kimberly, my lovely wife, the boss, right in YouTube. Now, if you were in Zoom, you can pop over to YouTube, jeffreytrader.com/YouTube, and pause, rewind, catch up if you got to step away. So, 4 feet of sunshine in Orlando. Lucky you. So, we've got a few things to talk about here today. Number one, the S&P 500 is stuck between a breakout and a breakdown. We're just above the downtrend line that was all of 2022. There goes the alarm, and it's time to start. We're just stuck just above that downtrend line. Like, are we going to break out? Are we going to break down? Let's cover it a little bit. Then we have chaos coming. FOMC meeting started today, and they do a press release at 2 p.m. tomorrow, and then Jerome Powell can't resist. He's got to get up and talk at 2:30. So what's going to happen? Let's go through some of the scenarios. And then, as always, number 3, we take your requests. Whatever you got, we'll throw it in the chat, and I'll cover as many as I can before the time's up. So don't get started yet. Give me a minute to go through the market conditions, and then we'll catch up with you. So remember, all trading involves a substantial risk of loss. Past performance not necessarily indicative of any future results. This presentation here, intended to be informational, educational, and fun, is not a recommendation to buy or sell any financial instrument. You desire that personal financial advice, you need to hire and consult a personal financial advisor. And let's start right here. Coming up 2 p.m. tomorrow, FOMC statement, federal funds rate. Are they going up? Are they going down? I don't know. And then we have the conference at 2:30, like I was mentioning right there in the start. So we've got that stuff coming up tomorrow, coming in hot. A few other things. ISM manufacturing at 10 a.m. JOLTS job openings at 10 a.m. And if you didn't know it, this week is the biggest week of earnings. Right here. Wednesday right here. Biggest week of earnings. Most anticipated earnings of all of Q1 coming in. We've got tomorrow after the close, we got Meta, we got Aflac, Elf, SI Time, Allstate, GSK, T-Mobile coming in before the market opens tomorrow. Waste Management before the market opens tomorrow. Humana. And then Thursday, look at that. Amazon, Apple, Alphabet, Ford, Qualcomm. Big names, big hitters. This is the biggest week of earnings in the season this year. So that's coming in hot for the rest of the week. All right. Moving on. Let's pop over to S5FI right here. Probably need a little refresh. Make sure it's got the most up-to-date data. Yeah, popping up just a little bit today. Hanging out right there in that top of the range. Let's go ahead and pop over to TradingView and look at this. That was the morning show. I've been doing a morning show if you haven't been paying attention. Every morning at 9:15, I've been going live on YouTube here and going through what's moving, what's hot, what's not. And let's see, right down here, S5FI. Yeah, we can only look at the daily. And let's check this out. Let me zoom this out just a little bit so we see more data. Now back here in 2020, I've gone through this a couple times. Look at what happened. We plummeted, hung out down here, shot up, reversed, came right back down into this 45 zone, popped up and just kind of rode right along that 80 line, right to all-time highs in September of 2020. And then we finally got a break and came back down and then kind of chopped around. And we really stayed chopping in there, just barely breaking out above 80 until well into 2021. Now, if that same sort of thing happens, let's pop back over here to the current day time here. Oh, what just happened? Not even what I wanted. Well, that's cool. Messed up the chart. Love that. Let's see if we can reload. No? Awesome. I don't even know what happened. There we go. There we go. So right back over here. We popped up. We dropped into October. We ramped up. This looks a lot like COVID right here. Popped up. And then we chugged down to about 40. Back up here, right near 80. Chopping back down to 40. Back up in the 70s. Ended up today. Hadn't updated yet. That says 67. The one over here said 73. So somewhere in that 70 range right there. And this is stocks above their 50-day moving average on the S&P 500. I kind of expect it to keep chopping right in here as we move higher. Now, that doesn't mean we won't experience another correction. We could see this pull right back down. We were kind of freaking out here in December on the pullback, and then we shot right back up and pulled down again and shot right back up. So what's going to happen? Well, time's going to tell, but I think we're going to hang out right between this 40 level and this 80 level for the next several months. Now, looking at this right here, this is where we're at. We broke above, and we just kind of been struggling to do anything. Now, I have another chart I want to pull up really quickly. I showed this off this morning. These were kind of my jamming around here. Missing. Where'd that chart just go? That's cool. Skipped around on me. All right. Zoom it back out. So these are my two most high probability scenarios. This, we made another candle right in this zone today. I was looking for us to pop and then come back and retest. We are above that trend line, or we may go for a deeper pull down, and that would be somewhere around the 3750 area on the S&P 500 right there. So that's something to keep an eye on. All right. This is something to be cognizant and aware of. Like if we top right here and we don't break out tomorrow, even if we do break out tomorrow, a retrace is probably in order. Either backtesting this purple trend line or going down for a lower low than we had in December. I don't see us going lower than we were in October at this time. So we'll have time. If we're going to do that, we'll have time, and I'll be able to warn you ahead. But right now, the two scenarios, either backtesting this trend line, that was the downtrend line of 2022, or going for this one more low than we had back here in October, back in December, excuse me. Tongue tying myself. All right. Yeah. We're going through what are the scenarios here? So that was that. And then this S&P chart, I've got several different S&P 500 charts. Now we are hitting our head. We've hit it once, twice, 3 times, my lady, right there at that level. We popped up there Friday and bounced down, coming back up close today, but we couldn't quite get there. This looks like we're going to go down and retest this trend line. That's what it looks like on the S&P 500 to me, is that we topped out for the 3rd time right there in that zone. We had a tail on a red candle, tail on a red candle. We had a tail on a green candle this time. Is this going to be the breakout? I don't know, but it does look like we've got a move down, a retrace, probably one more move down, retest that roadmap line one more time, and then potentially break out. So I'm a little bit biased on some sort of pullback tomorrow. Now, if we start out the day down, going lower, and then the FOMC hits, we could just rock it off. So this is where you've got to be very careful. What happens during the day can set the pace for what happens. So if we start out going up, then we're probably going to retrace on FOMC. If we start out down, we may shoot off on FOMC. All right. So that's the two scenarios that I've got going right now. I think whatever direction the day starts, we're going to do the opposite when the FOMC hits. All right. That's my feeling. That's what I'm getting from the market right now. All right. Looking on through, SPY just move the decimal point one place and knock a couple points off. So, you can see SPX 4076.59 and SPY coming in 406.48. So you just move that decimal place one and, knock like a point off roughly. and get you in the ballpark. All right, also looking at UVXY, just plummeting out. SVXY, rocketing, that's short VIX. And VIX itself is not on here for some reason. VIX just chopping around at the lows. I thought it was going to go back down in this zone, and it did. It just took a little longer. I was a little ahead of myself. We spiked up a little bit there in September, October, and then we've come right back down to levels where I thought we were going to come visit. So what's next? Well, we may get a little spike and continuation lower. We haven't really been lower than this level for, gosh, since early 21. I mean, late 21, I guess. You know, none in 2022. We were below this level. We are right down here at these lows. So watch for it to break down more and consolidate down the bottom there. You can see right back here, we were resting down there way back here before COVID, and we haven't really visited below about 14 since then. That's the VIX. Now, VIX tends to spike when the market drops. When there's uncertainty, when there's fear, the VIX tends to go. Bitcoin, chopping around a little bit here. Get some choppy price action, popping and dropping. Cannot break out above 24,000 yet. That's, you know, right around 25 is the next big resistance on the upside. We had these highs right here. Right back over here. Got a lot of stuff drawn on the chart, but we have a zone right there. We topped out several days back here in August, and we haven't been back up in that zone since then. That's resistance. If we can break up through that, that's going to be positive for more continuation higher on Bitcoin. God willing, we'll see it. All right. Nasdaq. I kind of skipped that one. Nasdaq consolidating right on the top of the roadmap line. This is good. Hopefully we don't see something where we roll back over like this. Hopefully we can actually get something going on up. That would be beautiful. The next resistance is up there around that red zone where we topped back in August. Russell is pushing higher. Look at that. It's higher than it's been. At the close today, it's higher than it's been since all the way back here in August of 22. That is bullish for Russell to keep going up right there. That's small caps, IWM, if you're wondering how to play that. So, all right. That right there, you know, target's right up here at those highs from August. So this one is primed to go. The market definitely looks like it's primed to go up. Is it going to be a fake out? I don't think so. There's a lot of stuff here. Now, this one, oil, I've got to caution you. This really looks like it can reach down one more time. This looks corrective. Right there. Look at this. This move up right here. Move it right over here. Look at that. Equal. That's a corrective pattern for continuation lower. Now, how much lower? I know I got a lot of fib lines on here. I'm going to remove some of them. Let's get rid of a few of these things. The primary target would be 66, and below that 62. So somewhere in this area right down here. That's not what a lot of people are thinking, but that's what the chart is telling me right now. We're going to see something like this. All right. So be careful on oil, but gasoline looking a little bullish here. That is kind of a little bit of a bullish setup. If we can break out above these highs, gasoline's going to run on higher. It can do that without oil. It's crazy to think, but it can definitely do that without oil. If it breaks back below this kind of flip point right here that I've got drawn, back below 238 a gallon, then we can see a lower price. And that price target I had from back earlier, I guess later last year, you know, October, November, when I was talking about September, October, that price down around $1.88. That's where I think we're going to go if we break back below 238, back down here. But if we break back up above those highs, watch out, baby. Gasoline can get more expensive. You know, the resistance is right there. So breaking back above that that high right there at 270 can take us back up to 299-ish. We break above 299 and it's on. Like we're probably going to run to a new high, or at least retest the highs we had back here in May. So that's going to hurt if you're buying gas. All right. Natural gas, that is plummeting out. Look at that. I don't have a target for that right now. It's got to find a bottom and start back before I can really tell you anything. Gold, I caution you, this thing is out over its ski tips and looking like it's going to get a pullback. When you compare it against all the other things, the inverse 10-year yield, like that's this thing is stretched out. Real yields on real money are better off put other places than gold. The upside opportunity is low compared to some of the other investments. So just be careful there. I'm not saying it has to pull back. I'm just saying use caution, please. Right here, copper. This thing's looking pretty bullish, although it also looks like it's going to pull back a little bit, find some support before the next big move up. Lumber, also coming off the lows, stuck at the roadmap line. Be careful on that one. If we break out, it can definitely run. And housing, this is one I found today. I'm going to have to go up to a weekly. Lots of stuff to talk about. Look at this. Housing bottomed back in December and has been rising, even though the rates have not really come off at all. Housing, this is housing futures. If you didn't know, CUS1 exclamation point. Look at this. This is ramping. This is positive for a recovering economy here. This is not indicating we're going into a recession. Now, there is resistance right up here around 316, 317. So if we find resistance and bounce down, we could get low, another leg down on housing. But right now, it looks like we're going to go up and at least test that 618 fib, and we could bounce down to around 274 on this chart. But that still only takes us back to where we were in the middle of 2021. So crazy, right? All right. We'll get into your request in just one moment. All right. Let's see. Was there anything else I wanted to talk about? I had one more chart. Trying to think. Oh, I remember. Interest rates. Look, this FOMC tomorrow. The orange is the Fed funds rate. All right. We're sitting at 4.1. The market rate at 4.19. That's the 2-year Treasury constant maturity. If you thought the Fed sets the market rate, you're full of it. They chase the 2-year Treasury rate. Now, the 2-year Treasury has been coming down for a couple weeks now, and we are looking at the FOMC going to raise rates. Are they going to cross this? Every time they've crossed it before, they cause some kind of financial crisis panic thing. It doesn't happen immediately. It usually goes sideways for 3 to 6 months, and then we have the financial crisis. So be careful right now. If they raise the rates again and don't hold off, this is one reason why I think they may pause or slow down, because if they cross this thing on the trajectory they're on right now, they're going to create a problem in the market. They need to slow down. They're about to cross the 2-year Treasury. So this is this right here is the main thing I'm watching. That Fed funds rate crosses the market rate, we're in for a countdown for a financial crisis of some sort. Now, if that real Treasury rate crosses back up and gets going again, then they're going to keep raising rates. So something to keep an eye on right there. That's DGS2 on TradingView. And the orange line is just Fed funds, FED, FUNDS. And I just use the compare button right there. All right. Moving on. Now is the time for your requests. I'm going to try to get as much as I can. If you hot load a whole bunch of them, I'll do the best I can to pick up all of your requests, but I got quite a few stacked up already. So first off, I see WCC. Let's see, make sure I get my right chart, right keyboard here. All right, that looks like I'm going to have to go down to the daily. On the daily chart, that looks like consolidation. Trying to break above, trying hard. Where's the extension? Let's see if I can find. Yeah, maybe some resistance at 156 on that one. All right, GRBK. We've got resistance right here. So above that, it can get an extension, but right now, I would watch out. It's already shown that it reverses off of that level once, twice, It's going to do it a third time. I don't know. Be careful on that one. Wire. I heard that was breaking out today. Look at that. Right above the first target. Next target up. 172 up there. That's the next target. WINN. W. Come on now. W. There we go. Yeah, so that one just keeps on extending here. Let's see. Didn't get a retrace yet. But we are extended. I would watch. That one doesn't have a lot of gas left to go much higher without some sort of retrace. So be careful. This one can get another one of these guys right there. Right back down to that 1618 level, back down to 95. Be careful. The higher it goes in one go, the faster, the steeper the decline is going to be. So we've got earnings coming up. Today? Is that what that was today? I don't know. Doesn't have the earnings updated yet, so careful on that one. HD, Home Depot. Yeah, holding the roadmap line. Next extension gets us up to 358. You can watch this, you know, set like an alert on a break of this line right here. That high, these highs. We break out right there, it's probably going to 358. That's supports with the housing I was showing off there a minute ago. All right, Netflix and FLX. Yeah, looking good. Made it up to the 1618 extension, right on the money there. Pulling back, may come back to this level right down here around 334 before it can get the next leg up. These things extend out to fibs. They retrace. You know, it could hold that 1272 at 348, but it may retrace a little deeper to 335, 334 area before it can get the next bounce. I am long-term bullish on this, going back up into this zone right here, filling that gap, back up around 500. All right, grab a few out of, let's see. Yeah, Alex, I kind of addressed the FOMC, so, all right. Non-farm payrolls, well, I'm more interested in what happens tomorrow before the non-farm payrolls. I think they've cooked the books so much on the payrolls that the market doesn't move as much on that. I think CPI and FOMC rate changes are the big movers right now. Non-farm payrolls are just kind of a meh right now. So we may get a little move on it, but I think the FOMC is the bigger deal this week so far. So come back one of the morning shows and we'll update it. You know, tomorrow morning, Thursday morning, Friday morning, I'll be on top of it all. All right, OXY. Yeah, it's still stuck right on the roadmap line there. If it can ever get going, up there's the target. Yeah, right around 96. Stuck right in there for now. Just going sideways. You know, oil prices pull back like I was looking at, and has a little tough time. Yeah, this one breaking back above this level right here, back above 180 area. It's going to take it back up to 200. Breaking back above 200 can take it back up into this, say, 240, 250, 260 area, back to that trend line. So we've got resistance right there. What'll be the roadmap line coming in across there. We break up through that, probably come up to here, and then retrace back to here, and then potentially break if it's going to be bullish. That downtrend line has been intact for a while, since all the way back in October 21. Lower high, lower high, lower high. Time to test it again. So we're probably going up into the mid 250 area on Tesla. May find a little resistance getting up through the roadmap line before it can just pop up there. So mid 250s on Tesla. All right, and that's going to take a little while. So TS, if you want something, you can buy some shares. This one is a 1.5x leverage, so be careful. Don't bet the farm on this. If you want to pick up a few shares at a reasonable price, $10, and get a 1.5 leverage on that thing going back up to 200, 250, right there you go. On a percent basis, you make out like a bandit. Just buy shares. Don't buy calls. Just buy shares. Don't play options on leverage. That's kind of crazy. All right, GOOG. Yeah, right up to the roadmap line, finding resistance. Needs to bust up. Amazon was looking hot today. At least my position was. I'm looking for this target right up here between 140 and 160 out into June timeframe, maybe July. That's what I'm looking for. And this thing is already started on the path. We need to break up above that. We've got this resistance where we found a lot of support and resistance on the way down. It was, you know, we just chopped in that zone. We popped up above it. We bounced off it. Then we crushed down through it. Then we tried to get back up through it and lost it. So we have the gap fill right up to the bottom of that orange, right up around 111 or so. That's where we gap down right back here on the earnings, the previous earnings. Got this earnings coming up on Thursday. It sure does look primed to pop, and we can pop right back up through here. So Amazon has been known to make some gigantic, ginormous moves on earnings. So watch that one. I am bullish though. I got a call spread 140, 160 out to July. So, and I've got some calls out to June. All right. Any questions on that one? No. Mara, I see this one all different places. Looking for this to happen. Didn't quite make it up to this point. I was looking for this kind of head and shoulders pattern to fill out. Looks like it's filling out a little lower potentially. We'll see what happens here. This thing has a rather bullish kind of setup here. So if we bounce down about somewhere in this neighborhood around $6 and then find support and turn around and bounce out, then game on for Mara. I don't quite have the head and shoulders drawn right. There it goes. That thing can pop, and let's see. This thing would be about like that. So the upside off of that would be somewhere around 16. All right. Now it can't just crush on down. You know, it doesn't have to go up. One I like better though is BT. This one, look at this. It's I was talking about this back when it was about $1.10, and now it's $1.50. Looking forward to at least get back up to this $2 area where it found resistance going higher back here in July and August. And then it consolidated right before it dropped down below that. So that's the resistance. It breaks up through that. This thing can get going like a monster. I mean, it came down a long way. It's got the next resistance up here around 6. So big potential on that for just a little bit of money on a few shares. Heck, even the options are pretty cheap all the way out to 2025 through the next Bitcoin halving event. So, all right, XHP. Yeah, popping out. Like, that's beautiful right there. That, let's see. Let's run this 3-point tool right here. Caution. If we stop right there and turn down, it can go lower low. What I really need to see is this to continue up to this level before we get a major pullback. So if we just turn down here, we're going to go lower. If we can break up, we'll push up to here, probably find resistance, and then pull back like this before getting the next leg up. All right, that is XHB. Tongue tie myself. Next one up, Square. I'm bullish on Square. I don't know if you've been paying attention, but bullish on Square. That's kind of looks like we may be running a little ahead of schedule here. Looks like we're doing this. We popped up, hit that, doing the pullback here. Already, hit up. And it's already doing the pullback, so it's already doing this part. So the next move is a move up to about 95. Pretty good. Looks pretty good to me. It may come down just a little bit lower and retest that 77, 78 area. But the next move up should take us to the top of the orange box. All right. Shop. Yeah, that one's breaking out. a really nice pattern. I am a little bit bullish on Shop, a little bit bullish on Square. Doing the same sort of pattern. At the minimum, it should go to this 5250. If it's gonna do a bullish breakout, it should be right up in this zone right there. We should move right up in here, then a potential pullback, and then the next breakout move, something like that. All right, and I did Amazon, Nvidia, also super bullish on Nvidia. This thing has some resistance. Just came up shy of that resistance right there at the orange zone between 202, say 210 and 220 right there. That comes from where all these tails bounced right back here in early January, February, March of 2022. And then we came down and crushed right through it, and we haven't been back up there. So watch for a little bit of resistance coming up through there. We may bounce down before we can get all the way through it. But next move I see, heading way on up here. And this one can get rocking here. You know, my ultimate target up here around 450 on Nvidia. You might think that's crazy right now, but this thing's driving the AI revolution. I don't know if you've paid attention. A lot of stuff on the internet about ChatGPT and stuff. All that runs on GPUs. Nvidia is the premier supplier of a lot of that stuff. So they're gonna ride high. You know, even Microsoft building a lot of these servers and stuff, they gotta have chips to run this stuff on. Nvidia, all right. I did Bitcoin. Let's see. Moving on down. Let's see. All right. BBY. Best Buy. Yeah. Best Buy. Look at that breakout. That's beautiful. I like it. Lots of stuff doing these awesome moves here. So this one looking like you get a move, even if it's bearish, looking like a move up to 103 will be likely. That's the play I got right now. I mean, you can go with a little bit lower expectations here, probably 91 before we get a pullback and extension, but likely to go on a run up to 103 area in the next couple weeks, months. You know, it doesn't have earnings till all the way out here in March. All right, AAL. Yeah, that target on that one's right up here, around 19, 18, 19. Got close on it's 1757. Pulling back, may dip a little bit more before it can do the next run. So that was a head and shoulders play right there, and it plays out fully at about 20. And did that shoulder, head, shoulder. Kind of stalled on the pop, but it should reach up and finish the pop here. And that puts it right where it did that move right there. All right, W. Was it Wayfair? Wayfair. And I've never seen anything I need. Resistance right there. You can easily run right back up to that $74 area. Then we got resistance. It kind of comes in where this consolidation was, this high was, you know, notice where it came down and bounced and then dropped through is right where it came up and bounced down. That's significant resistance. Watch out. Probably go up there and test it again. That would be my guess right there. All right, hood. I wish it would get off the floor. I have a couple hundred shares from much higher prices, but that does not look bullish yet. Stuck on the bottom of the roadmap line. We need it to break above. We need to make some higher highs here. This is not higher high. This is not bullish territory yet, although we do have a higher low. So that makes a stupid triangle thing that I hate. I'd like to see this break out. Now, back above 13 is bullish. Anything below that is just sideways to bearish. Hate to see it. Been stuck in some shares for a while. All right, Ford. Come on now. There we go. Ford. If you hadn't seen it on my YouTube channel, I made a case for this to be bullish over the next 3 to 5 years, and we broke out of the triangle here. Like I said, I hate these little triangle things. Breaking out, this can take us back up to this 19 to 20 area. And it can do it in real quick order. And then we'll probably pull back again, and then we'll go up again. And that's kind of my path I got right there. Now I do have a giant target way up here, triple digits, you know, some 70s and 100s, but right now in the near term, that's kind of the move I expect over the next several months. And that would take us mostly through 2024. So I own shares of that one. Alrighty, Costco. Welcome to Costco. I love you. If you haven't seen Idiocracy, it's a great movie. It really is. Alrighty. Costco, back in the triangle. It tried to break out of the triangle, and then it went right back in. So watch for it to break out above that top line. That may have been a fake out and a rip to the upside. It's got a large range on this thing, and it doesn't look right unless you put it in log mode. It's a wicked big range on this thing. So 737 on the upside, all the way down to 327 on the bottom side. So be careful on that one. Dangerous. That's an unpredictable pattern right there. It can do both. I mean, like I said, it broke down here. It can do that again and then rip down. So that's unpredictable. That doesn't leave me any high probability move at all on Costco. All right. GM was popping today. They came out and said that they've never had a better outlook on selling cars. Their EV stuff is super popular and they love it, and they're making tons of money, and they beat on the top and bottom numbers. Everything's rosy glasses and champagne toasts at GM right now. Hit resistance at the 39.50, may pull back or may extend out to 40. They do have some long-term resistance right over here that they're gonna have to get through to see these rosy all-time awesome days. I mean, look at this stock chart. It's not awesome all-time greatest hits. I mean, they're hanging out down here, not up here. So be careful. But that's what we got right there on GM. I see bigger upside potential in Ford, but GM can surprise us all. They can go ripping. So, you know, like Tesla's got large margins in the EV space right now, and they're building the moat. So that's the competition to beat. That's the one to take down, and they're not looking overly horrible either. So, welcome to the EV revolution. News I saw today, somebody saying some of these bigger 100 kilowatt hour vehicles that are coming out cost more to fill them up and more per 100 miles than gasoline right now. I don't know. Is the consumer going to keep after that if it's more expensive to operate EVs? I don't know. That's and that may not be something that people want to do if it's going to cost more than gasoline. It's going to be a tug and a pull and fighting nails, tooth and nail. All right. That is all the charts, unless I'll give you just a few seconds to throw anything else in. It's already been 37 minutes out of our 30 minutes of awesome. It's been great to everybody. Like I said, tomorrow morning, 9:15, I'm going live again, and then again live on Thursday and Friday, every day, 9:15 for the morning monster. I drink a monster in the mornings and chit-chat about the markets. Let you know what's moving, what's not. So I'll see everybody again in the morning. Have a great day. Thanks for coming. Bye for now. See you again next week.